Good morning, everyone. I am Yonela Jeneto. I am the funding manager for the Sasol Siyakha Trust. So I guess we have the fun topic today, funding. And we're trying to answer questions around why are funders saying there's lots of money, but you guys are not able to access that money. So if we can go to the first slide, I'll go into a little bit of what is Sasol Siyakha. And then my colleague Lumkile will take over in terms of the nitty-gritties around how to be funding ready to access Siyakha funding. Okay, so we'll introduce what Sasol Siyakha is, the funding offering under Sasol Siyakha. Lumkile will then do funding readiness, our application process, and we will then take questions and answers actually after our panel discussion. What is the Sasol Siyakha Trust? So the trust is a wholly owned trust that was actually created by Sasol in 2007. So we are 17 years old today. And really it is a vehicle that was created by Sasol to provide funding support to SMMEs. And we don't just do funding for this sector, but for suppliers that are within our value chain. And the objectives of the trust is to offer funding support, transfer business skills and financial entrepreneurial skills, and also embed good governance in the funded entities. So we'll unpack a little bit of this when we talk about our post-investment support. Because we're a development funder, and I just want to demystify something, development funding doesn't mean free funding. The idea of the trust is to lend you pay back, and we can lend on to the next person. So as long as it's not a grant, it is loan that we would like to obviously preserve our capital and be able to help other SMMEs. Okay. So you've never heard of this trust before, but guess what? We have disbursed over 1.2 billion to SMMEs to date. And we also have, we provide concessionary funding, so our interest rates are not linked, well, they are linked to prime, but they are on average prime minus. So we have saved our entities more than 50 million in interest savings. And we've launched a new product called purchase order funding. As you know, working capital is key in small businesses, where we've helped SMMEs in just 1 year unlock access to over 200 million in PO funding, but this is only for purchase orders with Sasol. One of our biggest transactions that we funded actually to an SMME was worth 373 million. And that was a dollar-denominated transaction, so it was about $25 million at the time. We have assisted over 100 SMMEs. And we pride ourselves in the fact that we're sitting at a split of between majority black-owned and male-owned at 46%. We'd obviously like to see that number go above 50%. And we've helped create over 1,300 jobs while sustaining 2,000 jobs. And our beneficiaries are 100% black-owned businesses, because that is the mandate of the Siyakha Trust. Okay, so who do we fund? I think I've touched a little bit on this. So we fund entities that are 51% black-owned, and this is supported by a affidavit or a BE certificate, depending on the sector that the entity is in. Entities must be registered in the Republic of South Africa, and the owners must be South African citizens, and obviously the businesses must be a going concern. So we are not in the business of trying to save businesses that are going down, right? So we want to help businesses scale up and grow. The entrepreneurs must also possess the adequate knowledge and skills to manage that business. So you can't wake up one day and say, oh, I want to be a trucker, and you know nothing about it. We're betting on you, right? So you need to have those adequate skills and knowledge to be able to manage that business. Turnover must be below 50 million. Again, I think for this sector, that becomes a sort of an obstacle, especially for operators, because you reach that 50 million quite quickly. And also we only fund from 250, and you must have a clear credit record. And this now goes for both directors and shareholders of the entity. We have seen deals that, that we can't fund because people are not paying their rates. Right? So they have judgments because you're just not paying your rates wherever you stay. Or you come in, it's a partnership, again, going back to that partnership, so you have to choose the right people that you go into business with. You come in, it's 3 of you, and one of the shareholders has a bad credit record. So this is something that is obviously very important for us because we are also registered with the National Credit Act. So, but we do give time, because we do understand that people go through difficult times. So we do give the opportunity for entities to rehabilitate, and we can then relook those funding applications. Okay, then we also have entities must be within the Sasol value chain. So what that means really is we're not going to fund your hairdressing business that has nothing to do with Sasol, right? So our mandate is to really enable you within the Sasol value chain. Must be SARS registered and compliant. Again, this one is important because if you owe SARS, then we are at high risk. So, and then also businesses must be owner managed with a profit motive. And what we mean here is you can't just be a silent owner somewhere and wanting funding from us. So we are betting on you, and we need you to be involved in that business actively for us to be able to fund your business. Okay. So the funding offerings that we have, but we will zoom into specifically for this sector. Funding offerings that we have is we do have grants. And this is now under ESD. We have grants for EDs if you are part of our enterprise and supplier development program. But also under Siyakha, we do have grants for feasibility studies and blended finance, where we blend it with our commercial offerings to just make the funding a little bit more affordable for SMMEs. And then under loans, we have standard loans, which are interest-bearing, and we also have interest-free loans. So we'll go into that. And then tailored solutions, we have tailored solutions to target specific SME challenges. We'll go into that in the next slide. And we don't just stop at giving you the money. We understand that SMMEs still require that development support. So we walk the journey with you and provide post-investment support. And what we do in our post-investment support is one of the things that we've found is entities will get all their documents ready to access the funding and then stop doing financial statements afterwards. And guess what? If you're not doing your financial statements, you're probably not doing your CIPC returns, you're probably not paying SARS, we're gonna have a problem somewhere. So we have post-investment support that just helps you to ensure that your compliance is in check. And also through our post-investment support, we also have advisory boards and mentorship services, where depending on where your entity is, you might need a one-on-one mentor that needs to walk the journey with you every single month, or you have an established business where you can tap into an advisory board. So what we also find with SME is that you don't really have a board, right? So now you then tap into an advisory board that will be able to assist your business as you grow and scale up. Okay. So tailored solutions, we have 4. We have the Women Empowerment Finance solution, and that is really to cater for the fact that there's an SME gap in the world, in South Africa, in Africa, but women, it's even worse for women. So we have then developed a solution to assist access to funding for women specifically, but this must be 100% Black women-owned and led entities. Again, we've had entities where on paper it's 100% Black women-owned, but this woman is nowhere to be found. We do our DD and we will find out. Okay, so and then we have the Sasol fuel station financing, which we will unpack in the next 2 slides. Transporter development funding solution. This is really for entities that are part of our Sasol transporter development program, where then we partner with bigger corporates in the logistics sector to help them with developing their transport businesses. And then Siyakha would then come in and provide that funding solution. We also have funding then for township development funding solution, which is to cater for our fence line communities. And what I mean by that would be our townships around Sasol operations in Secunda and Sasolburg. Okay. So now you have been appointed as to develop a Sasol site. And I don't know if yesterday they told you how much it is to develop a Sasol site. Sorry? 25 million. How much do you have? Yeah. So now you have nothing. So what do we do? So Sasol Siyakha does provide fuel station financing, so for property development where you own the land. And really it's really premised on a signed property development lease agreement with Sasol. So we're not going to help you with a BP Total engine, sorry. I think maybe my colleague from APSA can help you with that. But so we then help you to develop that site, backed by that lease agreement that you have with Sasol. We are able to provide 100% of that funding because this one is quite low risk for us because of that 10 to 15-year lease that you would have with Sasol. And this is a interest-bearing loan but again, like I said, it's concessionary funding from our side, so it is usually prime minus. We offer this funding up to 120 months. And also, if we have a product that a lot of financiers don't do, which is called loan consolidation. So now you have from another funder a funding that is priced at prime plus 10, which happens. We are then able to consolidate that because it's asset-backed to free up some cash flow for your entity. So we provide that across all our offerings. Okay. And then the fuel station. This one a little bit more riskier than the other one because what I maybe forgot to mention, on the property development one, the actual site we would take then as security. So we would register a mortgage bond over that site up until you pay it off. And then we have that asset as ours up until you pay that loan off. Whereas when you go into the franchisee, which is more operations, so here we provide funding for your franchisee rights, so your franchisee fee. I think it's 2.5 million, etc. Or now you have to buy its business acquisition, which is goodwill, which we cannot touch, so we can't take security over that. So as much as we do not have own contribution, we do look at the risk case by case, and if there is quite a high risk for us, we would ask for own contribution from your side, depending on the deal. We provide then funding here for operations. So you're starting out, especially for new sites, you need to pay for salaries, consumables for the C-store, car wash equipment, generators, CCTV equipment, all of those things we are able to provide as funding. This one is capped at up to 60 months, which we are linking to the franchisee agreement. And it would also be interest-bearing at prime minus, depending on the risk of the business. Okay, I think I stop here. Lumkile is going to talk about the more exciting stuff in terms of So this is the product, but how do you actually access the product? What are some of the things that we as a fund would look at that you just need to be mindful when you are building that business plan for you to submit to the fund?
Thank you, Yonela. It's difficult to fill in after her shoes, but I'll try my best. So in terms of funding readiness, what do we look for? So I'm the deal maker. You bring your application, it lands on my table, and then I look at it and say yes or no, basically. Yeah. So I'm that uncle from Stellenbosch that you were mentioning. Yeah. So basically, what do we look for? Is there trading history or not? So in the case of a site that needs to be developed, of course, that is then a new site, right? So no trading history is then required. And then in the case of an acquisition, so assuming you are buying an existing business, we would then use the history of the business that you are using, or the one that you intend acquiring, to then base our decision on whether to invest or not. Again, in terms of proof of revenue, going back to an existing site, that would typically have volume history, which we can then corroborate with our colleagues from our mobility team to then speak to the numbers and projections going forward. In the case of a new property development, traffic studies would then speak to the projected numbers on that particular site. A business plan, of course, that then needs to speak to the operations, who the people are behind the business, or your skill, your experience. And to Yonela's point previously, a good credit score. I mean, this is, remember, we are, as much as we are funding the entity, which is the juristic person, but the entity is run by an individual, so the credit score of an individual is very key. We don't want to see bank statements where there's withdrawals at casinos, and I mean, that speaks to the character of the entrepreneur, right? Then there's financial and compliance documentation, which we will delve into just now. So just from a funding universe, this is typically what the funders will look for. And the top one being ID documents. We've had the recent saga now with the Miss SA. So we need to know who we are dealing with. We need to know the person. Then we need to know where you stay. So proof of address becomes key, either in the form of a mortgage bond or a lease agreement. So this is all part of knowing your customer. Of course, we don't then fund sole proprietors. So you would need to then register an entity, which is a PTY in this case, because we no longer get CCs. And then annual financial statements where applicable. And then bank statements, like I alluded to, tax clearance, cash flow projections, business plan, and the like. The other thing, so Siyakha, as much as we mentioned there the personal and asset liabilities, personal assets and liabilities of the applicant, we are not a collateral-based lender. So what does that mean? The fact that you've got a property in Stellenbosch does not guarantee you accessing our funding. We literally look at the commercial viability of the transaction. But in a case where you've got the security, we will also then want to take it, as part of our security requirements. There is a last one there which says we will finance bad credit record. So some funding institutions and DFIs will fund people with judgments, but as the Siyakha Trust, we will not. As alluded to by Yonela. And then this is just a specific checklist for us as the Siyakha Trust. So the previous slide was just the funding universe in general, and this is specifically now for us. Sworn affidavits, shareholder certificates, company registration documents, proof of business address, certified ID copies, which need to be certified within a 3-month period. this is where we tend to get into a lot of fights with our SMEs. They'll say, yeah, but I've sent you a certified copy, but it's a year old. As part of the FICA requirements, it needs to be 3 months and less. Tax clearance certificates, again, you need to be right with the taxman. And we've had instances where we get copies of tax clearances, but the entity is still not compliant, either for outstanding VAT returns or things like that. So that really needs to speak to the SME paying attention, to their tax affairs. And then bank confirmation letters, of course. Again, so in most instances, we will then be paying directly to suppliers. But in the case where we are buying, let's say, an existing fuel station, we will then pay to either the nominated lawyer's trust account or the seller, And then in cases where we need to pay for working capital, we will then pay to your specific company, okay? Financial projections, I will speak to later. The resume of the shareholders, again, speaking to your experience, education, and the like. And then organizational structures, where applicable, business profile and the business plan. I will expand that on the business case. And then where we were then saying Sasol contracts or valid purchase orders. So that would not necessarily apply in this franchising space. But Yonela alluded to one of the products that we've got, which are purchase order financing and the like. So there you would then need a contract, which is what that speaks to. And then what needs to be in place? Again, credit checks. Your reputation is all you have. So you need to really take care of your personal credit profile. But also we also do check on the business as well. We also do what we call the anti-bribery checks. Again, they are done on the directors or the members and the business. And then in terms of fronting, we don't support fronting at all. We look badly upon it. So we don't want Khumalo and Sons run by Friki van der Merwe. We don't like those at all. Of course, you need to be either an EME or a QSE with a turnover not being 50 million. Minimum of 51% black ownership and BEE certificates, which are SANAS accredited, right? And then in terms of building the business case, so is the request in line with the funding mandate? What do we mean there? So we've got various funding products, working capital, asset finance loans, loan consolidations. So is your funding in line with that? That's what we mean there. And what is your funding need? In the business of selling money, everyone wants money, but you really need to drill down to separate the wants from the need, and that's what we mean there. So some of the examples of the funding need which we can do at Siyakha is, of course, business expansion. So in the case of a filling station, for example, let's say you need to extend another pump island, on the site. We can fund something like that. The actual franchise acquisition, so where you are buying an existing business, and working capital financing for either wet and dry stock, right? And then you also need to outline the cost and the business benefit for the funding that you are getting. So what difference will the Siyakha funding do to your business? It can either maintain or create jobs. It can give you access to economic opportunities where you previously had no opportunity to access those, but also access to an industry where we are getting new participants rather than funding people who've already been in business. And the bottom line is that a good business case is one that actually articulates the commercial and financial viability of that business. Okay. Then in terms of financial position, here we're talking income statement, balance sheet analysis, cash flow statement analysis. I don't want to go into the detail, but we will basically do either a horizontal or a vertical analysis of the financials, ratio analysis to assess whether the funding will actually make sense to the business and whether it can afford our loan. Remember, it's not a grant, it's a loan. So we don't want to leave you, to Bush's point yesterday, in a minus. We want you to be in a position where we actually take you from having no business to having a fully functional and profitable business. In terms of projections, what are projections? So projections are forecasts of your cash flows, of your cash inflows and inflows in the income and in the income statement and the balance sheet. They show funders your ability to afford the loan based on your expected income. They also help to identify funding needs, optimize pricing, plan production, time major expenditures, and monitor your cash flows. So in the case of a filling station, let's say you buy an old existing site and there needs to be renovations done. Cash flows will assist you to then determine when the break will be, because in the case of a site revamp, this takes about 3 to 6 months, and if you've got a loan from Siyakha, the loan repayment does not stop. So you need to plan around that, in terms of your cash flows. We then would require you to have annual projections, but also monthly projections to break down your expected numbers. And common mistakes that we usually come across is unrealistic sales targets. Going back to my point of an existing site, so let's say a particular site pumps 300,000 liters a month, and the shop sells 600,000 rand a month. You then come and say, I'm going to do 800,000 liters and R1 million for the shop. What is that based on? So there needs to be that cohesion and not a mismatch. But also lack of market research and competition. Do you then assume you are the only filling station in that vicinity? Are there going to be new developments in the area which might affect traffic, to access your site? So there we encourage you guys as SMEs to then approach the municipalities and just to get an understanding in terms of their integrated developmental plans, to know what development might be happening around your vicinity, because this can either make or break your site. Again, ignoring macroeconomic factors, things like inflation, economic changes, exchange rates. The exchange rate changed yesterday. Are we aware? Oh, okay. So hey? Yes. Okay, yeah. And then the other thing is underestimating expenses. This happens a lot. We get a business case that is so unrealistic. We are making profit from day one. Guys, it doesn't work. So there's a standard matrix. I mean, Mr. Stewart and Bushe yesterday alluded to fixed costs that are there and variable costs. So you know that in a typical fuel station, your gross margins, your gross profits, for example, are anywhere between 10 and 12%. So if you then come to me and say my site will do 30%, then I'm, you are already taking. Again, with your expenditures, we know that they're anywhere between 65 and about 70%. So if you are way below, then it means you don't know what you're doing. But if you are way above, it's also an issue that you are not able to control your expenditure, right? But also failing to account for seasonality. So typically what happens around Gauteng or Joburg, in December, all the people who are from the other provinces go home, and then it's very quiet and nice in Joburg, So if you're a fuel station owner, you'll know that you'll probably not be making as much sales, because of the seasonality. Then again, ignoring the timing of cash flows, like I was saying, in terms of a site revamp, for example, you would also need to factor that in terms of the projections. In terms of our application process, so the colleagues mentioned that yesterday that you apply through our website. They then can also give you referrals to us for funding those sites. We will then, in terms of application screening, we will then do our credit checks, like I said, check for all the requisite documents and make sure that they are on file. And then a thorough assessment of the business case in terms of looking at the credit scoring, financial projections, and the narration in terms of the business case. and then it then gets approved. So I, as a deal maker, will write and package your transaction, and then the committee will then sit and make a final decision on whether to grant the funds to you or not. Post-approval, then it's the disbursement process where loan agreements get signed, and then the actual payment, to the necessary partners. Yonela alluded to the issue of post-investment. I will not speak to that. And then from a compliance landscape, we are subscribed to the National Credit Act, so we are a responsible financial institution. We also subscribe to the FICA, but we've also got our own risk management process, So remember, colleagues, there's no perfect deal, but we try and have all the necessary compliance in place in order to make your business a success as far as we possibly can. I think that is it from my side. So this is just, again, how you can access us. I see your email is not there and your business card. But those are the contact details, colleagues. We've got 3 regions generally. So it's the Secunda region, the Sasol Back, and RSA. So RSA is all over, everywhere else. And those are the contact people there. And I'm done. Thanks, colleagues.